Well, good morning, gentlemen.
Morning. It's good to be back. Full of teeth.
It's great to leave the house. This is my first shower of the week. This is the first time I've left the house all week. This is good times.
All right.
We caught you after bath day. That's great.
Well, I used to.
Adam,
I used
turn
to
your
do
mic
one
up.
day a week of not showering. Now I only do 1 day a week of showering.
Oh, God, I can smell it. That's what
No,
it is.
no. I showered. This is all fresh. This is all fresh and clean. This is shower day.
I feel bad for your wife.
I thought it was in the studio with the Renaissance dudes again. All right, let's get to
the mud
it.
flingers.
Pig pen. There's like dust flying around them. You know.
We got a lot of stuff to cover, gentlemen, so stop jaw jacking, okay? Let's go.
Jaw jacking and hem hawing are what we do best.
Leo and Katrina are very loud.
We've got a little bit of the updates to go through, and so we're going to talk about new listings on the market.
Hey, no touchy.
I totally just wrote on you.
6 feet.
I can't tell you how many times I've done that to my husband with a pen, like
6
right
feet,
on him.
6 feet.
It's all the time. Anyway. Okay, so if you remember last week, we had 1,159 new listings. This week, only 860 new listings for 3 counties.
It's like the rug's being pulled out from under us.
7 days. So that's not quite half, but it's really low. We're also seeing the number of pendings drop. Not huge. Again, I think this is a backstory in inventory, but there was 1,118 last Friday. This morning, there's 883 new listings. 993 new listings pending in the last 7 days. Sold 985, and last week we had 1511. That number's half. So remember I said it would be about a month in before we would start to see these numbers on what's going on. And you got to think about the data produced by Florida Realtors. That's even more delayed because that's like 45 days behind. So we'll see how that goes, and I will pull the Florida Realtor stats when it's time just to kind of have a look. So canceled and withdrawn, kind of a small number. 187 canceled, 54 withdrawn. And price decreases, 875. We had more price decreases than new listings come on the market.
This is the time of year that we're supposed to, quote unquote, be starting to enter the busy season. So this is actually going to impact the busy season of real estate.
Yes. And it'll be interesting to see how that goes down. And we'll continue to measure like the absorption rate and things like that, which is the number of months supply homes that we have on the market. But this is the first week, really, I've seen numbers that I'm like, oh, there's the shift right there. This is the first week of the sign.
And we're just over a month into when the world ended on March 11th.
Yep. And there's still all these lagging indicators, right? I mean, just talked about how I had 2 that fell apart. I mean, back on the market last week was 558. This week, 390. So, and I think there's some people that are holding off even from selling. So we'll see how all this shakes out in the coming, months and weeks ahead. So yesterday, gentlemen, we had a guest that canceled, and I actually had Pat on my list forever to interview on the show, What Would I Do If I Were 22? So you guys missed like the whole backstory of Pat. So I'll have him give you like the short and skinny. You have to listen to the podcast to hear the whole thing, and then kind of pick up where we left off because we ran out of time. It was only 30 minutes. And really, we don't even have a ton of time this segment, Pat, but I definitely want you to jump in and kind of continue where we left off.
Well, I really kind of don't remember where we left off. I think it was when I just received my job in the Bill Curry van at Q105, I think.
You can't remember yesterday. What is this, newspaper?
So you guys, what you missed was talking about how Pat wanted to be a cop, and he was a reserve deputy for TPD for like 10 years. And then basically he was going to be a truck driver. And he had this baby face and nobody would hire him. And basically he only could get this job as a janitor. Well, guess where the job as a janitor was?
It was at a radio station, of course.
And so that's how Pat actually got his start, was playing around with the board. How did you figure out how to work all those controls? Because, I mean, for the person listening, you've likely never been into a radio station and seen those huge boards, the mixers, which is right in front of you, Pat, and you operate that, and you have to know what everything does.
Well, back in those days, they were big round knobs. They weren't even slide pots the way they are now. But what I did is I learned to run those boards by making mistakes. And it was really funny. I brought up a person's name yesterday, Jeff Lawrence, who does just about every commercial. If you ever turn on an infomercial, if you turn on and listen to Universal Studio commercials, and also the voice with Alex Trebek on Colonial Penn, that's Jeff Lawrence. And the funny thing is, I brought up his name yesterday, and he called me yesterday afternoon. I haven't talked to that guy in 30 years. Now, you want to talk about something strange. And it wasn't that he listened to the show or anything. I just told him, I said, you're not going to believe this story, but I talked about you this morning, and here we are speaking. And he got out of radio. He's living up on the top of a mountain in North Carolina now, and he was just so happy to hear that here I am still back in, I really haven't left radio, and I've been doing this 40 years. And a matter of fact, one of the things that I've been doing traffic, and I was going to bring up this yesterday, that I am not the oldest traffic reporter, but I'm the longest running traffic reporter in the Tampa Bay area, because people like Al Ford and Arch Deal, Gary McHenry, and all these legends that did traffic, they have all since, they retired and now they passed on. So I'm really the last oldest traffic reporter left in the Bay Area.
That's been in a helicopter.
We never flew a helicopter. It was always a fixed wing, a Cessna 150 or a Cessna 170. We were never, ever in helicopters. Helicopters are so dangerous. Now, there is a helicopter that works for the TV stations that flies around and reports information to the reporters, but there's not a reporter in that.
And that. Good. That's good trivia knowledge there.
You used to be like the youngest one in radio, Pat, and now it's interesting. You're like the oldest in terms of like the traffic reporter, longest running.
Yeah, and it's funny. I worked at Radio Disney, which I didn't get to. When I finally left the FM dial, I left the FM side of the radio, and I went off into, I actually went into police work. I was a police officer at the school system, so I was a school cop for a period of time, about 3 years, and then I got back into radio. I worked at Radio Disney for about 12 years.
No, wait,
and
I wanted to ask you this. I never did. What did you do at Radio Disney?
I did everything. I was the program director, I was the promotion director, and I was the janitor again. I did absolutely everything there. We did about 200 promotions a year for 12 years, all around the Tampa Bay area. And the cool thing about
listening, Pat, what's a promotion?
A promotion is something where if you go out to a car lot or a grocery store, or if you go to a grand opening of something and you see a radio station there with their tent and they're handing out prizes, and they have a prize wheel, and you do things like that. You go to concerts, and if you're in front of a concert with your banners up, those are all promotions. And I did those, as a matter of fact, for about 15 years at Q105, 12 years at Radio Disney. And at Radio Disney, I had little people that would help me as far as young kids that were 12 and under, 8 to 12.
Not what I was thinking.
And 8 to 12 years old that were taught to become news reporters. I actually had to show them how to run the board, how to do certain things on the radio. And it's funny, one of those young people is a news anchor in North Carolina now.
That's so great. And so were you technically a Disney employee? You were, right?
Yeah, well, no, not technically. You are a Disney employee. As a matter of fact, I retired from Radio Disney at the age of 55, and I still get the perks of Disney until the day I die now, because everybody that's a retiree at Disney, they leave with annual passes, and they leave with big discounts, and I actually get a pension from Disney every year.
No. What's the point of the promotions, Pat? Is this as prevalent as it used to be, or do we see it less?
No, promotions aren't the way they used to be. They used to, they would be everywhere every day. And a lot of that is cut down because you can really do a lot of promoting through social networking now. You can have your own Facebook page, your own, media, social media that you can send the message out, and you can interact with listeners that way. But promotions still do happen, but I would say at about a 40% opportunity out there instead of, every Saturday. It would be every other Saturday or once a month.
And radio's changed, a lot in your time period. It's changed so much.
Radio has changed 180 degrees, and it changes more and more every day.
So, we're almost out of time. Yeah, the music rolling in. And so...
He made the music roll in, actually.
I know.
He's done talking.
Well, sort of. That's one of the things in radio that's changed, right? A lot of stuff automatically happens.
Yeah, well, we had your guest calling in, so I had to answer the phone for you. That was ringing, and I didn't want them to think that nobody was home at the radio station.
So, last but not least, Pat, what do you do for 2020 with radio for 40 years?
personally, I would do it all over again. Professionally, I would either be a police officer.
Police dispatcher.
I would be a police officer on the street, Leo Cannon, looking for people like you.
Street cop.
No, dispatcher. It's how you find your radio.
Yeah,
All right, coming up.
And we get all kinds of calls.
I am not a
That's
test.
next hour.
Next hour. I'm very excited. Do we have Seth on the phone? We have Seth with Brookstone Financial on the phone, don't we?
We should.
I'm very excited to talk to him about SBA products and resources.
Seth, are you there? That's the next best thing to the emergency
Right.
broadcast.
Yeah,
Go ahead. Try to talk to him now because he could not hear the signal. He hung up. But I think Seth is with us now.
How's it going, Seth? Are you with us?
I am.
Good morning. How are you?
Oh, I'm good. I've got there's some new developments which you may already be aware of.
You know, this is the crazy thing. Like with this whole SBA and the loans, it is so ever changing. Like, is it me or is this thing like changing on a daily basis?
Well, it is changing on a daily basis, if not at least a weekly basis. But so late Wednesday night, they announced that the funding ran dry. So there's a second round of funding that's held up in D.C. now. But I'm still encouraging any and all small business owners to continue getting those PPP applications in. And the SBA, they froze their application process online yesterday. So you can't even apply on the website anymore.
So what about like if you currently have an SBA loan? I mean, I know some of those guys were reaching out to their customers offering these products. Is everything frozen everywhere?
Well, it's my understanding, talking to my banker and then some other banker associates, that as long as you were issued your approval number, an SBA loan number, then your funds should be earmarked in that first round. So I think at this point, from what we're hearing, everything hinges on whether or not you've actually received the approval number or have a loan number.
So I guess everything's subject to change, right? In this second round I can't imagine there won't be a second round. But with that being said, how much do you know about like people that don't have a lot of employees? I mean, I think a lot of people that may get stuck in the middle of this would be your small business owners or your LLC, maybe 1 member, 2 member type of entities. What help is there for them, or was there for them, I guess?
Well, here's a good example of how the rules changed as this program progressed is the disaster loan and loan advance portion of the disaster loan. There was a $10,000 loan advance. And initially, the language on it was pretty clear. You complete the application, we're going to wire the $10,000 loan advance, you'll have it within 3 days, provide your routing and account number. It's a pretty simple process. And what we found was 3 days went by, 5, 7, 10 days went by, nothing showed up. And then last week, or maybe it was early this week, there was an email that went out directly from SBA, and they restated the terms of the $10,000 loan advance. Now they place stipulations that say, well, wait a minute, this $10,000 is $1,000 per employee, up to a maximum of 10. So, again, that's just one example. And you mentioned people getting caught in the middle. I mean, there's two things that happen. One of them they can control, and one obviously is outside of their control. But the element that they can control is you got to get on top of this. I mean, as soon as these programs, whether it's first round, second round, or even potentially third round, are announced, you have to get on that application process. Now, the portion that's outside of their control, which is unfortunate, is that there's many banks and lending institutions and credit unions that aren't even equipped or offering the application process. So if you have a pre-existing relationship with a bank and they're telling you, hey, let me check into it, I'll get back with you, or maybe they just tell you straight up, we don't have access to it, you need to immediately, not even pass go and find another bank, because that's going to hang you up if nothing else, if you don't have access to it. And banks are to the point now where I'm hearing internally from banking associates locally that they're not even taking new clients. They're focused on servicing the ones that they have.
And that's a good point, Seth. I think that's where banks should be focusing. And I know I've seen a lot of my counterparts and other business owners online tell me, and I've seen different people say that, their banks are not helping them or whatever. And so now they're actually looking for a different banking relationship because they feel like, their bank should be helping them in the time when they need it most.
Yeah, and you're going to see a lot of movement in the banking world. I think you're going to see a huge migration of clients away from those banks that were ill-equipped during this first round of funding over to banks that are well-equipped. And it's an interesting program because, these are federal funds, but when you look at how these funds are distributed and some of the nuances of the underwriting process are at a local level or handled at a local level and at an individual bank level. So different banks had different formulas. Some of them had spreadsheets, that they would send out to you. They were all basically built around the same formula that was provided at a federal level. But at the same time, it's like they had their own way to get there. There's a path from point A to point B. Well, there were multiple paths in this situation.
So let me ask my counterparts in the studio. Leo, I know you guys applied for some of the grants, right?
Yeah, we applied for EIDL back on April 3rd, and I did it with all three of my companies. Heard nothing until the email telling me that basically that I got the same email the rest of the business owners did, where they were going to do it in priority based on number of employees you had. And when I read something like that as a business owner, I'm thinking the 490-person firm is going to get theirs before the 10-person firm. That's the way I read it. So I just discount it. I've also heard on the EIDL the interest rate keeps going up and up and up. It started at 0.5%, and now it's at 4.5%. So I'm not even sure I want this thing.
Yeah, the rules are changing as we speak, and an interesting kind of side note, which I thought was quite interesting because I have a couple entities that I'm affiliated with, and so with the PPP, the Payroll Protection Program, the short version of the calculation is it's 2.5 times your trailing 12 months payroll. That's what you're eligible to receive. So it's somewhat of a set amount based upon your payroll reports. So. But here's what I saw happen is our smaller LLCs or our smaller loans were funded within, 4 to 6 days. So, almost instantaneous. And the entities that I'm affiliated with the larger payrolls, those loans are still dragging on. Now, thankfully, we do have a loan approval number. And from what I'm hearing, that's key right now to those funds being earmarked for you because, as we mentioned Wednesday evening, the well ran dry. There was $350 million, I think, approximately appropriated for the payroll protection, and then approximately $350 billion, and then $10 billion for the EIDL, the Loan Advance Program, and the disaster recovery, and they're both dried up.
When I initially heard $350 billion for the entire United States small business, I knew the money was going to dry up. And back on April 4th, when my bank told me I needed to have my application complete by April 6th, and oh, by the way, we're going to be redoing the process 4 or 5 times throughout the weekend, I didn't even hesitate. I dedicated my entire weekend to getting that application in. So thankfully I did, and I got funded before the money ran out.
So you did get some funds?
For PPP, not for EIDL. But it was weird. They were telling me, my bank was telling me that they haven't finalized the process yet, but the money's going to run out unless your application's in on Monday. Bear with us while we revamp everything throughout the weekend, but do it this weekend so you're guaranteed to get funds. And I spent about 8 hours that weekend redoing the same set of paperwork.
It's a lot of information. I was looking at it.
It's a one-page form.
Yeah.
With 800 pages of backup.
Yeah, exactly.
Yeah, exactly. Yeah, and those with payroll processing companies, I think it made it a bit easier and a bit, much quicker to gather the information.
I disagree.
Not so much.
Really?
Because a week after I scrambled and got my application in, ADP, who does 1 in 5 Americans' payroll,
Sure.
They said that their reporting forms were not reporting the correct information, and they had to revamp them. So they were waiting on getting the form. And we caught that. That was part of the reason why it took so long that weekend, is we actually caught the part where ADP's reporting forms were inaccurate for this calculation. So we had to manually do it anyway.
Oh, wow.
And I guess
Okay.
that poses the question, like, what if it's wrong? Then what?
Well, I mean, you have your IRS forms and you have your other forms that you need to go off of, and that's the raw data. You basically have to collect that raw data and do the calculation. And some banks had...
And there's a lot of good faith. There's a lot of good faith that went into this process. I mean, I think we would all agree because of the underwriting. The underwriting is very basic, very high level.
So, do you know if there's any other, like, help out there for small business owners?
You know, I tell you, one of the most encouraging things that I've seen, because being in finance, you know, initially a lot of our clients kind of compare this to 08 and 09, and there's similarities, obviously, but it's so different because financially, the banking world is in very good shape, you know, coming into this, and most corporations are in very good shape.
Every day like they were back in 08.
Yeah, and so to see the private sector has really stepped up. I mean, that's been so encouraging. So my advice would be to reach out to, you know, and you've seen these posts, you know, reach out to your auto insurance. They're providing leniency and maybe credits because you're not driving as much.
This is Adam Talley with Talley Insurance, and we are joined by Seth Stewart with Brookstone Financial, and really intrigued.
Great news.
Yeah, I'd love to pick back up where we were on all these SBA products and government loans and assistance. So, Seth, take it away.
The city of Tampa?
Oh, City of Tampa is doing something. I saw that
City
too.
of Tampa won or something. Do you know anything about that, Seth?
No, sir, I do not. I know here local government, I'm at our home office here in the Louisville metro area, Louisville, Kentucky, and there are some, state, county programs available. But before we went to break, you know, one of the things we were talking about was the fact that these funds, first-round funding for SBA and the payroll protection, have dried up. Now, there's anticipated second and even potentially third-round funding. But in the meantime, I would encourage everyone to reach out, you know, and as we mentioned, the private sector's really stepped up. Reach out to companies like your auto insurance, your homeowners insurance, or if you know, maybe even your mortgage provider, because or auto loan provider, because there's a lot of leniency coming from the private sector, which is great to see, because you got to realize the economy was strong prior to this virus, and it's not another 08, it's not another 09. This is not a financial crisis. So that's really encouraging for us to see that the private sector step up.
So I got another question, just kind of looking for your thoughts on this in general. You know, when I look at just in general, I mean, not what the government's doing and what everybody else is doing, just in general, what my own beliefs are. Like, I don't know in any other market I would take a loan to keep employees on. Like, I don't know that I would risk that as a business.
But it's forgivable.
I know, but like, how did you read that language? Like, how detailed is that? What happens if it's not forgivable?
Well, as we know, it's 75%. If you spend 75% of the funds on payroll over an 8-week period, then the entire amount becomes forgivable. So there's a little grace there with that additional 25%, which can actually be used for mortgage, rent, lease, etc. It's pretty clearly outlined. So I see it as a loan that turns into a grant somewhat.
So 75% is going to go towards payroll, and then 25% can go towards like your building expenses or whatever.
Yeah, and the biggest
75 must go.
Yeah, the biggest stipulation there, other than that 75% rule, is you can't reduce payroll. So I can't cut people's salaries and I can't lay people off. So this came up in my business law meeting on Tuesday, where if you have to fire someone for performance, you can. It's not that you have to keep your current staff for the next 8 weeks. You just have to have the same number of people.
Interesting.
So you can fire someone and replace that someone, and then you still are in the forgivable category.
That's interesting.
I really like this approach because I see it as a bottom-up approach to stimulate the economy versus the traditional top-down starting with big business. I mean, and it all starts with jobs. And like Adam just said, you know, if people have jobs, the goal is they spend money, right? I mean, that's the whole premise behind this. People have jobs, people spend money. I think the biggest unknown at this point, from an economic standpoint, is how spooked are the American people in returning to normal life and habits and shopping and so on.
That's just it. It was that there was a word in there that kind of got buried in what you were saying, Seth. And I think it's going to be habits, right? Because there's been a lot of books written on habits, and I think the numbers show it takes about 21 days, right, consistently to break a habit. And so, with that being said, I just think about, are people going to just jump right in and go back out to eat? You know?
I think it'll be regional.
If they
right?
have to figure out other ways of doing things, are they just going to go back into their old norm, or are they going to stay in the new norm?
Have you been to a shopping store like a Target or a Home Depot or a Publix recently? People are still going out there and shopping.
But it's only the grocery store. It's not like they're at the mall. It's not like they're eating out.
But if the mall was open, I feel like if the mall was open, it would be it might be like 30% of the people of their normal capacity, but I feel like there'd still be people there.
It'd be flooded. I mean, I guarantee you that many people don't need to be in a Publix at 2 in the afternoon on a work day, because I travel a lot for work normally, and I'm in Publixes and Winn-Dixies on a regular basis grabbing my lunch. The amount of people I've seen sporadically in Publix on these off-peak times is staggering. These people don't need to be in that store. Lanes open, and now they have 8 lanes open just to handle the volume of people.
It's still probably not whatever they would have been doing a month ago.
Well, this could be, it can be a touchy subject, but I would encourage everyone as well to read, and I think it was yesterday evening it was released, and I just read it this morning before we went on the air, the CDC guideline, this 3-step process for reopening the economy. And it's pretty interesting. It's a pretty short, simple read. But you're going to see, according to this 3-step process, you're also, and I could see this happening, because like Adam mentioned, you go out to Walmart to pick up necessities or wherever you're going. I think you're also going to see a demographic trends. The younger individuals are probably going to be first to get back out and get at it, getting into the social scenes, social distancing obviously still in place, but I think the older demographic is going to, rightfully so, probably be a little slower to get out there in public or feel comfortable.
Leo was the one talking, Seth, but Adam's actually shaking his head saying no.
Oh, sorry. Yeah.
So, no, you don't think
no?
Okay. Oh, no, I agree.
You agree?
No, what I was, to the social distancing thing, I think there's plenty of people that are ready to get back to some normalcy. I know it's never going to be normal again, but,
I'm on the opposite end of the spectrum. I'm loving the fact I don't have to deal with people face to face. I'm an engineer. I might just keep this going for the rest of the year. I've already told my wife I'm not going to do any social engagements for the rest of the year. I'm done. I'm just going to isolate myself and turn into a hermit.
It's the new normal.
What do you miss the most, Adam?
Just everything, seeing my friends. Honestly, missing our Disney trip for anniversary next weekend, missing our cruise in May, missing just being able to go do whatever I want to do. It's like being grounded.
There's always so much going on in Tampa. Yeah, it's a good analogy. There's always so much going on in Tampa. Like, even if you didn't have any plans, you could just choose something last minute and go do it. So, yeah.
Restaurants, eating, just all sorts of stuff. I miss everything. I'm
starting not to, 21 days for a habit, I'm starting not to miss anything. I'm just like, I'm isolated. I'm on my own little island. I'm fine.
Well, my husband, that is like clearly older than me, had a 50th birthday party planned on a ship and did not get the chance to go either. So, not only did I have to say, well, I got good news and bad news. I planned a surprise 50th birthday party for you, and the bad news is we're not going. And I had canceled myself about a week and a half before the cruises actually pulled the plug. So, and we had a lot of people planned to go.
Yeah.
I'm tempted that when this whole thing is over, just up and pack up and go to Belize and stay there 100% of the time so I can just continue this isolation.
Well, the route you're going, you're going to be able to figure it out. That's for sure.
You won't see me anymore.
Well,
I think
we're all going to figure out how to work.
Seth, I'm curious to know, because you guys help. You guys are financial advisors by trade, and so when I think about the whole thing and like what industries may suffer the most, I think definitely the airlines, maybe the hotels, I think are going to be really slow to recover from this because people are getting used to a new way of doing business with video conferencing and that sort of stuff. And I look at my own travel, I'm not sure that I am going to travel as much for work when things get back to normal. What are your thoughts on that? Which ones do you think, what companies and industries do you think will be impacted the most? Did we lose him?
Seth, you still there?
Seth?
Yes,
Okay.
I'm here.
What industries do you think will be impacted the most coming out of this? Katrina's thinking it'll
Yeah,
be
you know,
hotels and airlines.
yeah, I think that's the obvious. I believe from a real estate standpoint, we raise a lot of capital on the commercial real estate side. You know, from that side of things, I think you're going to see hospitality have a pretty substantial impact. You know, hotels and a lot of the, you know, as a result of business-oriented travel maybe dwindling somewhat as a result of people learning to interact or conduct business remotely through screen share meetings, and it's pretty efficient. I mean, at our company, we've implemented these technologies years ago, so it was a pretty seamless transition for us. Some have scrambled to get there. But obviously, hospitality, you know, the restaurants are going to be that's going to be a long, rough road, I believe, for some of these restaurants.
I think commercial real estate is going to be significantly impacted as well.
Yeah, I mean, think about it. You're going to have companies that are going to come out of this and say, you know what, do we really need 100,000 or 200,000 square foot of Class A office space? These folks learned to work remotely. We were pretty efficient. We can cut costs. So, yeah, I believe so.
I think people are actually working more from home, too. I know when I look at myself, I'd be interested to hear from you, gentlemen, but I'm working more now, like in the last month, than I have. And I already worked a lot, but I'm working even more now.
It depends on your character. I mean, I'm having issues with some of my employees. I mean, if you are a workhorse in the office, you're going to be even more of a workhorse at home because you're going to feel guilty. But if you kind of were slacking in the office, you're going to be slacking even more because you're at home because no one's babysitting you or watching you. So it really depends on the person's personality, where the three of us, obviously business owners, we're going to work harder by ourselves because we're always holding ourselves accountable. So we're a bad metric.
I think to me, because I've been thinking about this a lot, and I agree that, you know, some personalities, some fit better or worse, but I think overall, because I've worked from home for a few weeks when I didn't know, you know, when I was sick for a little bit, and then I've been back at the office, but for me, there's just not as many distractions because there's no sports, right. there's no news other than coronavirus, and I only give myself like 45 minutes to read that a day. So for me, there's just no distraction. I'm getting a lot of work done because I don't have anything else to do except for work. So everything's done. I'm down to like 5 emails in my inbox right now.
So what do you think, Seth?
Well, I've got to admit that my issue has been in distractions and not so much from, you know, sports or mine's really primarily been due to kids. You know, working from home, I have a 13, 14-year-old, and it's tough, you know, with them being cooped up. Parents have been kind of shifted into this homeschool mentality or approach. So with everyone in the house and me trying to work from home, I'd say the distractions are my hurdle to overcome.
I think that's the hardest part because I know my kids, they're like social media and especially my son, right? He's like smart, so he's like, this is get it done in an hour. So I don't know. I think we'll see a lot of people shift. So thanks for
Thank you.
So thanks so much again, Seth Stewart with Brookstone Financial.
Thank you.
Counterpart parts with Money Puzzles on Thursday at 8 a.m. here on Money Talk 1010. Stick around when we come back right after the break. Sarah Cookie will be joining us for your mortgage update for the week. We got some pretty good news, so stick around.
And inspection, joined with Adam. Adam, give the audience your voice so they don't confuse the two of us.
This is Adam Talley with Talley Insurance. Poor Seth.
I don't think we sound that similar.
I don't think so either.
But now let's do this. Katrina.
That's me.
And
sorta.
Sarah.
Good morning.
See, we got four distinct voices here. How you doing, Sarah?
Hanging in there. Glad it's Friday.
Is it Friday
Is
already?
it? I can't tell.
I don't know what
I work from home and I work 7 days a week, and all my TV shows are off the air, so I don't know what day it is.
So
she had such a rough week. She could become Susan.
Wow.
I'm going to have a conversation with you, Katrina, about that here once you're off air.
it's a little bit of our fun little inside joke. But I didn't actually do that on the air. Sorry about that.
Sarah becoming Susan
okay.
is different than Sarah becoming Steve.
Oh, I just tease her a little bit. I have fun with her. I've known her for a long time. So what's going on in the mortgage world? Because things are a little better this week, right? Sorta? Or you're still in the weeds yourself, or what?
I mean, I have a mini update this week. Some good news. Okay, there are some assistance programs that are being implemented right now for participants in the Ginnie Mae Single Family Mortgage-Backed Securities Program that are hopefully going to improve liquidity in that area. So we're hoping to see some improvement with regards to government interest rates in the next 7 days or so. I'll be keeping a close eye on that, and hopefully next week I'll have some great news to report back there. That program is what impacts interest rates for government-backed loans, such as VA, FHA, USDA mortgage programs. They've been really, really struggling for the last month. It's been impossible to get decent pricing, even with very high credit scores. So we're hopeful for some good news there.
For the person listening, when she says decent pricing on those, it means it costs you an arm and a leg to even get a rate to do that loan program. So that means banks are highly encouraging you to take other loan products like conventional.
What
Correct.
For what you were just talking about? What's a good, even you said even with a good credit score? What kind of quality?
Well, before we landed in the situation we're in now, rewind 2 months ago, government rates were in the very low threes, with higher credit scores even lower than that. With a credit score over 740 right now, just as an example, we're seeing pricing. There is no par pricing, meaning there is no interest rate that does not come with a cost associated with it. High credit,
you gotta pay for it.
High credit scores are bringing decent interest rates, but because there is no par pricing, it comes with points, and no one with a good credit score, especially in a FHA low down payment loan, is going to want to spend 2 points at closing, which could equate to thousands of dollars as an example. We're hoping to see that level out where interest rate and pricing is concerned and stabilize a little bit. Like to get back to where we were, where we could lock government interest rates with no cost in the low threes, and hoping to see some improvement there over the next week. Conventional rates are excellent. So it's a great time to refinance your house right now. Seeing interest rates for no cash out owner-occupied refis, purchase transactions in the very low threes, with average credit scores, 640, 66, or over 640, 660, 680, and in the very high twos for fixed 30-year mortgages with credit scores even higher than that. So it's great. It's a great time to shop if you want to compare what your current rate is to what's available in the market now.
So I know it depends, right, on the size of the loan and a number of other things on if it actually makes sense.
Correct.
And what your break-even point is if you roll those closing costs in. But anybody with a rate over what percentage should be inquiring about possibly refinancing?
I'm going to say with a great credit score, anyone with a rate over 3.875, 3.75, with an average credit score, anyone with a rate over 4.1% might be wise to just call to get a comparison.
Definitely. All right, so listen, our off-air number is 813-377-2775. You can call or text Sarah to 813-377-2775. And again, if your rate's over that roughly 4% mark, it's a good time to check it out. 813-377-2775. Now, you do have to have a job. Can't be furloughed, right?
Correct.
All the normal rules would apply.
All the normal rules apply, and then a few extra. But if you are actively working in a secure position, it's a great time to shop.
Anything else we should add on what's going on this week in your world?
It's been a roller coaster. This week, it's the craziness of finding out if a client's going to be able to keep their job from one day to the next. Things like that are still happening. I believe they're going to still continue to happen. Just looking, like I said, for some relief in the government sector so that we can start helping those folks that deserve it.
And have you seen any changes yet to appraisals?
All kinds of changes. Every investor is kind of handling that differently. Fannie and Freddie are making some accommodation for appraisers that don't want to enter properties. They're allowing exterior or drive-by appraisals. Some investors and appraisal management companies are actually having you, the seller or borrower, if it's a refinance, complete a form that doesn't just ask if you're symptomatic or if you've traveled, but have you had guests to your home? And if you answer yes to those questions, they'll either reassign another appraiser willing to go or look at the propensity to maybe convert that to an exterior appraisal. That would pertain to purchase transactions, no cash-out refinance transactions. Anything that's cash out, for example, in a refinance is going to absolutely require a full appraisal, and so we might see some issues there. But that's what's happening, and it's varying from one, like I said, appraisal management company to the next.
So out of 10 deals, 10 purchase transactions, how many are you seeing that actually are accepting a drive-by appraisal?
I personally have one or two. For the most part, especially in purchase transactions, thankfully, several of mine have been vacant, and so the appraisers have had less of an issue going in the property. I can tell you that they're inundated right now. Turn times are not as good as they were to get an appraisal back. On some of my refinance...
Longer to get a mortgage, too?
Yeah, definitely taking a little longer to get a mortgage.
How many days?
But worthwhile if you can lower your rate.
30, 45 days?
30 to 45, yeah. We're on target for that.
All right. Sarah Crickey, thanks so much for joining us this week for the Mortgage Update.
Sure.
And we'll be back here in hour number 2 for Tampa Home Talk. And we're going to join Christine Long with Metropolitan Ministries. Adam also has an insurance tip of the week. So stick around. This is Tampa Home Talk. We'll be back for hour number 2 with Leo Kane kicking us off. And actually, we're going to share some listeners. So stick around. We'll be back for hour number 2 in 10 minutes.